Hi, Mehdi Sandaji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. So, Adam from Interaxis.io, welcome back.
Good to be back here, Mehdi, on a freezing cold day.
Well, you look a little bit chilly over there, so we'll keep this fast and furious to keep you warm and warm you up. But obviously, we're a week on since the ETFs have been approved last week for Bitcoin, and it's still a very hot topic. There's all the big leaders are at Davos at the moment, and it seems to be a hot topic there as well. We've got Grayscale being represented alongside Coinbase and some of the other larger exchanges and players in the crypto market. It feels like we're institutionalizing where it's not just Bitcoin, but obviously the whole crypto industry is slowly edging its way more into this institutional universe. So, I'd love to pick your brains on your thoughts post the Bitcoin ETF launch or ETFs launch. They kicked off day one of trading with about $4.5 billion in transactions. We then saw over the next 3 days, it was about $10 billion in volume, which these are significant numbers. But I want to, obviously, I want to pick your brains on your thoughts around that, but also right into the fact that we saw a high of about 49,000 on Bitcoin going into the launch. We're now sitting at, I don't know exactly where we are, somewhere between 42,000, 43,000, maybe 42,500, let's just call it. So that's a significant pullback, even though we've seen these large inflows and the large volume over the first several days of trading in ETFs. So, Adam, over to you firstly on your thoughts around these volumes that we've seen going into the ETF.
Well, there's so much going into it. One, the volume around the ETF is so far and away the highest volume for opening days of any ETFs ever. And I think, you have some of the numbers, Mehdi, there in front of you that you could probably rattle off, but the amount of trading volume and the amount of inflows dwarfed probably any ETF, in any ETF grouping launches ever. And we saw so much volume from Bitwise. We saw so much we've seen from BlackRock and Fidelity mostly. We even saw Valkyrie, which was one of the ETFs, already got acquired, so that's already out. And I think it speaks a little bit to the interest that was already there. Now, I think when you talk about the price coming down, I think some people were a little bit disappointed with the volume that went in. And what people have to realize is there's a difference between the volume of trading of the ETFs and the actual inflows into the ETF. So when we say there was $10 billion in trading, that doesn't mean $10 billion came into the ETFs. I think I don't know, we're not quite at $1 billion yet that has flowed in. And we also have to remember that GBTC, which was worth 26 billion pre ETF conversion, GBTC converted to an ETF, was worth 26 billion or something. It's actually lost quite a bit in terms of outflows leaving GBTC, leaving Grayscale. And part of that is because people were locked up for so long and they now had the ability to convert and actually, I think, redeem Bitcoin for some of their shares if they chose to. And I think a lot of people were converting and then selling off their GBTC because the fees were high and maybe moving, starting to move into others, or just kind of biding their time. And I think probably figuring out what they were going to do. It's probably people that mostly that had made quite a bit of capital gains on their GBTC investment, especially when we see, taking up of the discount that happened in GBTC since the middle of last year. And so Grayscale had huge outflows while everyone else was taking on inflows. So I think that's while it was the most successful ETF launch ever in terms of volume, in terms of inflows, I think for a lot of people, especially in the Bitcoin community, it was a little bit disappointing.
Well, so I think you touched on it there, and what a lot of what I've been seeing and reading about as well. And there's a lot of these talking heads out there, emphasizing the point that the grayscale side of things. There was a large sell-off in grayscale, the trust, and that's added to this pressure, downward pressure on Bitcoin. but we've also seen, it sounds like there's a lot of the miners have been selling their Bitcoin holdings. And it looks like the stats I saw was something like 110,000 Bitcoin, which equates to about 4.5, $4.7 billion worth of Bitcoin was sold by miners. Um, why would you potentially see miners adding to the sell side on this as well?
Well, I think, look, miners, one, have had a run up in the price of Bitcoin. They've had they had a run up in their stock price, had a run up in the price of Bitcoin going into this. So I think some of them were profit taking, I guess, to try to move into cash. Remember, miners have to pay their bills in cash. So it's a good idea for them to have cash on hand to be able to pay everything. And I think I'm guessing what they're thinking as well is that coming up in April, there's going to be the halving event where the amount of new Bitcoin that is produced every day, every week, every year, whatever it might be, gets slashed in half. And what that means is the miners' revenue, because their source of revenue is they're producing Bitcoin, that's their only product, is going to get cut in half. They're still going to have to pay their bills during that time, even if the price of creating one Bitcoin is higher than the current market price at the time. So it's probably somewhat where they are just kind of storing some cash around. I mean, they can go get what 4 or 5% on their cash in something like treasuries, something safe like treasuries. So why would they not have some cash around to pay their bills in those initial months after the halving? What we usually see after the halving, or the halving is coming up in April, is prices dip a little bit and then they take off. But the miners have to get to that point, right? They have to get to that point where they they can pay their bills during that time until the price of Bitcoin gets above their cost of Bitcoin. So I'm guessing that's part of the reason that they're selling off some of their Bitcoin that they kind of have stashes. They don't want everything that they have on their balance sheet to be denominated in Bitcoin when they're not quite sure what's going to happen. It ended up being somewhat of a sell the news event, but I think the news that was sold was not ETF launch. It was, we didn't have $10 billion flowing in day one, and therefore we're a little bit disappointed with it.
That totally makes sense. And you know what? Who knew miners had to pay bills? So good for them cashing in some of their chips to actually put some food on the table. So it is what it is. But that kind of all ties into the narrative that we're kind of seeing. It makes a lot of sense. I don't see any of this as a negative to the underlying of Bitcoin or what we're potentially going to see in the next stages of things.
Right.
Um,
And remember, real quick, Mehdi, and I know we're going to talk about a little bit about this in a bit, but talking about the kind of disappointment in the inflows. ETF started trading on Thursday, right? Then we had Thursday, we had Friday, we had a long, a holiday weekend. We had freezes all over the country where people, were not able to go to work. They had other things to worry about. We had, airports shut down and everything. Very odd weekend we had, having it be a holiday weekend. I mean, here I am in Colorado and things were shut down because it was so cold, which you wouldn't think would happen here. Keep in mind also, many of the wirehouses and many of the bank broker dealers are still not allowing the ETFs. And part of that is because they have to wait for those ETFs. Their rules are they have to have a certain amount of AUM before we'll allow them on the platform. Part of it is some of them doing some extra education around Bitcoin and ETFs before they allow their advisors to put it in client portfolios. So it's not like the ETFs launched and every broker dealer and every custodian allowed them. It's many, the wirehouses like the Merrill Lynch, Morgan Stanleys of the world, plus a lot of the bank broker dealers, Wells Fargo and such, just aren't allowing them. And maybe it's that they're not allowing them yet, but that's where a tremendous amount of the wealth in this country is held, within those wirehouses and bank broker dealers. And if they're not allowing the ETFs, then that's so much more potential that could be allocated to the ETFs that isn't there yet, that hasn't been realized yet. And maybe that will come in the coming weeks or months as they add to their education and as those ETFs add AUM and are allowed on the platform.
So it's funny you say that because obviously one of the things I was going to bring up was, picking one out of a hat is Vanguard, right? Vanguard wasn't allowing people to invest in the ETFs. I don't know if that's changed necessarily by now, but from what I understand, it hasn't. So that kind of explains that stopgap
Right.
between some of these large institutions still not participating. And then on
Right.
the flip side, you have people like JP Morgan who are coming out and saying, they're seeing significant capital inflows from some of these existing products like the Bitcoin Trust from Grayscale GBTC, even though that's now converted into an ETF. But they're seeing outflows potentially from that into other ETF products, and there's that fee game as well going on. 1.5% for Grayscale down to less than 0.5%, 0.4%, 0.3% some of these other products. So we're going to see some fluidity around this situation. We're going to see people start educating themselves about different products that might fit their needs, and we're just going to see people getting involved slowly but surely. So what's next is kind of the question that comes up. And if you ask me or Larry Fink, we're of the same mindset.
Yeah.
It seems like the next conversation, and we've seen it also in the price move, is the Ether ETF. ETH is has had a nice little run since Bitcoin has launched. We've seen ETH up probably 15-20% comfortably. And that's the next hot topic of where the ETF landscape is going to go. So Larry Fink from BlackRock was out saying that he believes that this is next. What are your thoughts around this, Adam?
Well, I think we've talked about with it after a Bitcoin ETF, spot ETF. I don't think it's going to be very long before there's an ETH ETF. I don't think that the SEC is going to delay and delay and delay like they did before. I think I think we've established custody. I think we've established what the derivatives markets are going to do. I think they've talked already about how they realized that the futures markets moved almost exactly in line with the spot markets, and they've realized that. I don't think they're going to have very many legs to stand on to delay and delay and delay. So, and look, we've said before, when Larry Fink talks like that, he knows something. And pretty sure that the ETH ETF isn't going to be too far away. We've already had several applications go in for various types of Bitcoin ETFs, right? We've had the covered call Bitcoin ETF from Grayscale. ProShares already has thrown in, I think two like leveraged Bitcoin spot ETFs and such, where they're going to try to get a little more yield out of it. Of course, BlackRock and Fidelity and several others, Bitwise and a few others have already filed for ETH ETFs. I don't think we're going to wait. We're going to have all those delays and delays and delays. I don't know when the kind of drop dead date is for the SEC based on whenever I guess BlackRock filed, but I have a feeling it's not going to make it that far. As we speak, the SEC is in court right now arguing with Coinbase. And from what I've read already this morning, the judge has really given it to the SEC. And so, if the SEC gets another kind of loss there, I don't think they're going to be able to stand a whole lot on delaying an ETH spot ETF because we've kind of taken care of everything. And again, Larry Fink probably knows something. It affected the price of ETH already, in that we saw a big jump, kind of right after he said that. And so I have to imagine that's next. And then there's probably going to be something like Bitcoin, ETH 50-50. There's going to be more, kind of covered call, leveraged, Bitcoin and ETH ETFs. There's going to be all sorts of flavors. I did notice this morning, by the way, I think it was Van Eck actually, it actually ended their futures ETF, futures Bitcoin ETF, because they kind of said there's no reason for this anymore. No one really cares about it when we have the Bitcoin, the spot. We have the real thing. So why are we going to do the futures ETF? I have a feeling that most of those futures ETF firms are going to do the same thing because the volume was already pretty low. And you have to wonder why anyone would get into those anymore when they can just get into the spot.
Totally makes sense. I'm sure we'll see some sort of consolidation in that space as well, and we'll probably see similar in the actual spot ETFs over the next several months or years as well coming, because we probably don't need 11, 12 of these things either.
Right.
Adam, is there any preparation? So we're looking at an ETH ETF. Is there anything that needs to be done with Ethereum? I know Vitalik was out talking about raising the gas limits to improve network capacity. Is this a positive, or is this could this potentially be a bit more burdensome in trying to get things over the finish line, or is this irrelevant?
I think It's relevant in terms of adoption of Ethereum. It's relevant in terms of adoption of the network, things like Larry Fink and our friend Jamie Dimon have talked about in terms of tokenization, maybe on top of Ethereum. I think it's relevant because what Vitalik was talking about was increasing the amount of the number of transactions, increasing the amount of space basically in any particular block. And the blocks on Ethereum are about every 12 to 13 seconds versus Bitcoin, which is about every 10 minutes. Increasing the space of each block means that you can actually have more throughput and more capacity. But what the way he said to do it was increase what's called gas fees. So when you try to effect a transaction on the Ethereum blockchain, so if I'm sending you ETH or I'm sending you USDC, Medi, I have to pay for that. And the way I pay for that is my ETH that's in my wallet is converted into something called gas to make those to basically pay for those transactions. And what Vitalik said is maybe we increase the price of transactions or increase the max capacity on any one particular block by about 33%, which means we can put more transactions in every block, which means there can be more of those I'm sending you USDC, or I am lending, or I am borrowing, or I am exchanging different crypto assets. There can be more of those transactions on every block, which means you can have more transactions, more happening on every space, more happening on every block, which means the Ethereum chain, the Ethereum network can process more transactions. And that's what Vitalik is going with. I don't think Vitalik is into what do we do for the price of ETH. He's more into what do we do for more people to be able to use this as a global settlement layer. And this is how we can do it. I don't know if that necessarily affects the price of ETH all that much. But what I think is if more companies, institutions, protocols, whatever, are building on top of Ethereum because of this, then overall, long term, it's probably good for the price of ETH.
So one of the things that comes up occasionally, and it has over time in regards to Bitcoin, is the fact that we still obviously don't know Satoshi, who he is. He has the largest wallet of Bitcoin, and that's been one of the concerns for a lot of investors. That how can I invest in something where I don't really know where it stemmed from? Could it be North Korea? Could it be a nefarious region? We don't know, but ETH obviously doesn't have those types of issues, and I think that puts a lot of people in at more ease, knowing that there is a person, there's a group behind this that the regulators or someone can go and have a conversation with and say, hey, we don't like what you're doing here, or there's at least a conversation to be had, right?
Right.
Which can't happen with Bitcoin. But on the flip side, that's also kind of one of the selling points of Bitcoin is the fact that there is no one to go and have that conversation with, and it's completely decentralized, and it's going to run the way it's going to run, and it's going to manage itself the way it's going to manage itself through the network. So, horses for courses, I guess, is what it comes down to. But they're all just interesting conversations that we're now having at a grown-up level. The fact that things have started being approved.
Exactly. And I get it. It's hard for a bunch of people who have grown up with traditional finance to think about this asset that is 100% digital, that is just literally created out of thin air, but that it has value. We don't know exactly who created it, and the person or people that created it actually own more of it than anybody else. Those are hard concepts to get over. And I understand that. If I had been in finance my entire life, and I'm in my 50s or 60s or so, even in my 40s like I am now, I would kind of have a difficult time with getting through that value, especially, Mehdi, when we think about the last 15 years or so that, gold it's not like people have run to gold all that much, which traditionally has been our store of value. Our store of value for the last 15 years has been the dollar more than anything else. And we know exactly who creates more dollars and why they create more dollars and the power it can have. And it is really difficult to get into your brain this concept of Bitcoin, this concept of this verifiable scarcity, but it's verifiable because it's 100% reliant on technology. It is not something that we pull out of the ground, and it's not something that a group of people whose names we know get together every month and discuss how many more or how many fewer we're going to have. It's completely done via code, and that's just hard to get through your head.
Yeah, It's early baby steps in what should be a lifetime of evolution. So we'll see how it all comes around in this revolution. So, Adam, before we wrap, I want to just run over back to Davos and some of the comments that have been coming out. And you mentioned obviously the dollars, but on the conversation of digital dollars, Tether has been it's had some negative press over the last several years in one way or another. It's obviously a very useful on ramp into getting into Bitcoin and other crypto assets. So talk us through Howard Lutnick, who's been commenting. He's the Cantor Fitzgerald CEO, so obviously a recognized name in the financial industry, speaking at what is probably one of the largest financial get-togethers of powers that be from around the world at Davos. So, what are his thoughts around Tether?
Well, I believe Cantor Fitzgerald actually manages some of the Tether assets, and they have gone, deep dive into Tether because of that. And what he said in Davos this week was, "We've looked at everything they have, and we know that many of the naysayers say that Tether does not have as many dollars or dollar equivalents as the number of USDT that have been issued." And what he was saying is, we've seen all their assets and they have them all. They have that many, billions of dollars sitting there in various accounts around the world, and they have enough for all the USDT that's been issued. Of course, you and I have talked about this over and over and over again. Some of the naysayers say this is the biggest potential rug pull there could be in crypto, that if there aren't enough dollars in the bank for all the Tether that have been issued, then theoretically someone could, take a bunch of Tether that aren't worth anything, buy a bunch of Bitcoin, dump the price, and walk away with billions of dollars. And what Howard Lutnick is saying, who is, very respected in the financial world, is we've looked, we've audited, and it's all there.
Well, let's see how that has an impact, because certainly when the initial stories of the negativity around Tether having verifiable assets, it certainly had an impact on negative side towards on the Bitcoin price at the time. Let's see if that has a positive impact when more verification is done. But Adam, as always, thank you so much for sharing your thoughts on crypto and crypto
Oh,
assets.
glad to be here, Mehdi. Thanks so much.
And I want to remind our viewers, make sure you check out Adam's courses on digital assets and crypto education. You just sign up on interaxis.io. And of course, don't forget to sign up and subscribe to Your Finance TV. We're comfortably through 10,000 something subscribers. So, things are going fast and furious on our side as well. So thank you for all your support. And until next time, good luck investing.